This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Appliance manufacturer Whirlpool recently announced both job and profit forecast cuts, and the company says it's closing a refrigerator factory in Arkansas. Whirlpool stock fell in the wake of all of that bad news, but we wanted to give you a bigger picture of what's been going on with this stock. And here to help us do that are Tracy Reinick and Bill Wilton. So on the fundamental side, Tracy, this bad news hasn't been around that long, really. It's like within the past year, right?
Yes. Whirlpool did pretty well out of the recession. They had big growth in a key market, which is Brazil. And so that kind of buoyed up North America and Europe for a while. Brazil's still going well, but they're starting to see a lot of competition there from mainly Korean manufacturers, actually. Right now, Whirlpool has about 40% of the Brazilian market, but that's going to shrink. They have high margins there because they do control so much of the market, but that's also going to shrink. So they have somewhat of a slowdown there, and then they are seeing a slowdown again in the North American and Europe markets. It's just weaker demand there.
Yep.
So those two things combined aren't good. They didn't really see this coming, as you implied. About a year ago, they had pretty good projections for earnings growth in 2011, and that's been cut by about 2/3 or so now. And that, we're not even at the end of the year yet. So the estimates have all been coming down by the analysts because the company themselves have been cutting. So yeah, a lot of this has happened in the last year.
And they really don't offer a whole lot of guidance for the future, do they?
No, 2012, they haven't really talked about yet. I think they're going to try to get through this restructuring that they're, doing, and then see where they go from there. They will be cutting a decent amount of their capacity, about 10%, which should help both the North American and European markets because they were just making too many products. But, what happens in 2012, we're going to see with commodity costs, which is also pressuring their margins, and then just overall demand.
So that's really the reasoning behind all of this, just pressure from a lot of different directions on them?
Yeah, both what's happening with the housing market. I think a lot of people assumed that, we would see some growth in the overall housing market by now, and that clearly isn't happening. So a company like this that was expecting, a little bit stronger demand is now realizing that that's not going to come back.
So, Bill, the charts that you brought with you kind of bear out what Tracy said, right? This decline is just like within the past year.
Yeah, like you guys have been saying. I mean, it's pretty much the past 12 months have been really brutal, and a stock like Whirlpool that's been around for so long, the go-to for a struggling stock is usually, it's been a tough market. Here you can see that the blue line is the S&P, the black line is Whirlpool's shares. The market's been holding up even though it has been turbulent, so that's not really the problem. You can see that shares are off quite a bit, and mainly due to all those reasons that Tracy highlighted there. And then the other thing that people love to do is it's hitting a bottom. Now's a good time to buy, but the problem is there's still not much upside. We do have some good support in the near term here. You can see that it's bouncing off these levels fairly consistently, but with earnings and everything coming down and all the pressures that we were talking about, there really isn't much upside. So, it's hard to justify buying here, even though that, it looks like the downside might be limited, but the upside story just isn't there enough to justify it.
I was going to ask you that next. Is there a way of telling where if their downside is limited, where the bottom is on this spiral?
Well, what a lot of traders like to see is, the bottom is in. You see that mark where people won't let it go any further below before they start buying again, and we're starting to see that here. Around this $50 mark. Once it gets below that, people are coming and buying, but without enough upside, you can only have so many of those buyers before it just starts going right through that level.
So it's another situation that only time will tell.
Yeah, and once it gets below that, it could be another a pretty substantial free fall from there.
Okay, we'll have to have you guys keep an eye on it and report any progress to the upside back to us. And with Tracy and Bill, I'm Terry Ruffalo.